Hi guys, I'm Rijo Joseph and welcome to my channel. Today it's a bit different topic than what usually we discuss in our videos. Today I'm going to talk about swing trading. So in this video, I'm going to talk about three things. What is swing trading? Some characteristics of swing trading and some tips and tricks and strategies to do swing trading. So let's begin. What is swing trading? Swing trading is a form of trading where traders buy securities or stocks in anticipation that the price of the stock will rise, and once it is risen within few days to few weeks, they sell them off for profits. There is a difference between intraday trading, swing trading, and long-term trade. Talking about the intraday trading, it is buying and selling the stock on the same day. When it comes to swing trading, when a stock is bought for few weeks to few months, and when it rises in value, it is sold off. And the long-term trade refers to when a stock or a security is bought for minimum 3 to 5 years or more than that. Swing trading can be a challenging skill to develop. It requires discipline and in-depth market analysis of how your stock or how your security is going to perform on every day. It is generally observed that in intraday trading, people lose a lot of money, whereas in swing trading, if you have the patience and the discipline, the profits are much higher. Moving further, let me discuss a few characteristics of swing trading. The number one characteristic of swing trading is staying disciplined. The success in a swing trade depends on how disciplined a person is. A stock which you have purchased may plummet or skyrocket within a matter of few hours. And it may be sometimes difficult to digest, especially when you are holding on to a stock or your trade for a long period of time. The underlying statement is do not give in to greed. And not to give in to greed, it is very necessary that you set a target price for your stock to be sold. And once the target price is reached, make sure that you sell your stock, take the profits, and make an exit. Setting a target price will prevent you from holding on to a stock for a longer period of time than decided. It will save you from losing all your gains. For example, let's suppose you have purchased Tata Motors at a particular price and you have set a target of 15%. That means as soon as Tata Motors will give a 15% move, you are going to sell that stock and move away. But on the contrary, you see that within 1 to 2 days, it has crossed your target and it is reaching to 25%. Don't fall for the greed. Make your exit at 15%. That is your set target. That is what is called discipline in trade. Now let's take a different scenario that you have purchased a Tata Motors stock for a certain 15% move or 15% target. But what happens is it takes another route, an opposite direction, and it starts falling. Don't keep on holding to that stock. In that case, what you need to do is you need to set a stop loss. Setting a stop loss at a particular percent or at a particular price means that once the stock is falling and it reaches that particular point of stop loss, your broker is automatically going to sell the stock. Definitely, you will make a loss in this trade, but your losses will be minimum if you calculate the stop loss and put the stop loss at that particular point. Another characteristic is letting go of your trade, especially when you have purchased a stock in hope that or in anticipation that it will rise, but on the contrary, it keeps falling. What happens is you keep on holding to the stock in hope that it will rise back to its initial and your target once again. But what you are losing here is the time and the money. That is where stop loss is the most important thing in a trade. Another key to succeed in swing trade is having a small and well-researched portfolio. Underline a small and well-researched portfolio. That's because if you have so many stocks in your portfolio or your portfolio is too large, it will be difficult to track the movement of all the stocks at the same time because you are holding on to the stock for a short period of time. So not being able to track the movement of all the stocks, it may happen that we hold on to a particular stock longer than necessary. So we need to be very careful about picking up which stock to trade in. In my opinion, it's just a personal opinion that if you have 2 lakh rupees to swing trade, what I would suggest is have maximum 5 stocks in your portfolio at a certain period of time. That will amount to putting maximum of 20% of your amount into one stock. And that's a good bet, I guess. Another component of a good swing trade is focusing on to very few or minimum market sectors. According to Motley Fool in 2021, in addition to focusing on to very few stocks, you need to limit your focus on to very few market sectors so that a particular industry shift does not devastate your whole portfolio. Having said that, it is also necessary that you have stocks from 5 different sectors if you are selecting 5 stocks, because that will minimize your risk. If one sector doesn't work properly or doesn't give you the proper returns that you have expected, the others will definitely. Another trick to succeed in swing trading is having an eagle eye on stocks that have a lot of potential. As a swing trader, you need to be very careful and very clear in your mind that you need to pick stocks which give moves over a certain period of time. As a swing trader, you need to care more about price swings in a stock rather than holding on to a stock for a longer period of time. So I would suggest you to choose stocks which have a high volatility and low market capitalization. And this suggestion is strictly for swing trade, not for long term. Having said that, making money in swing trade is easy if you are ready to analyze your stocks properly and pick your stocks based on the potential and the strong fundamental. In swing trading, another factor that you need to keep check is when is a company announcement going to happen? Because around every announcement, around every positive announcement, the stock of that particular company is going to rally, is going to have an upward trend, is going to have an upward move with regard to the announcement. So for the swing trader, that is a golden opportunity. So you, as a swing trader, you need to be very aware about the certain market, certain industry, and the changes happening in that particular industry. So here is a quick recap of what we have discussed in this video. We have discussed that what is swing trading, that is holding on to a stock for minimum 2 weeks to few months and selling it off at a higher price. Moving ahead, we have talked about ways and means to succeed in swing trading. That is by having discipline, by proper picking of stocks, by having a limited number of stocks in your portfolio, by having a limited access or exposure to different market sectors. I hope you have enjoyed this video, and if you have, please share it with your contacts and other people whom you know. It will really help us grow. Thank you and goodbye.